Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello, my name is Audrey Gill. I run a thematic strategy and asset allocation division at Standard Chartered Bank. Welcome to Talking Thematics, a series of conversations where we will discuss about future trends, big ideas, or themes that will shape our investment future today and for many years to come. Following the release of our latest 360 perspective on cryptocurrencies, I believe many of you might be interested to know more about what cryptocurrency is and how it will impact and transform the way we work and live. So today I'm very glad to welcome Manpreet Gill, our head of FICC, joining me to cover topics including what is cryptocurrencies, is it considered real money, and how do we put a value on cryptocurrencies, and of course, what this all means for investors. So welcome Manpreet. Well, if you look at cryptocurrencies today, it is increasingly a topic of interest among our investors and clients. There are many cryptocurrencies out there, including Bitcoin, Ethereum, Dogecoin, just to name a few. Of course, Bitcoin is the oldest one. It started back in 2009 when founder Satoshi Nakamoto started the Bitcoin network in order to circumvent intermediaries such as banks and financial institutions, which were at that time undertaking a lot of money printing and certainly deep in the financial crisis as well. So that was originally designed as a medium of exchange, but is increasingly seen as a store of value, triggering one of the biggest debate on whether cryptocurrencies are indeed money. So what is your take on this, Manpreet?
Hi, Audrey. Thanks for having me on. You're right. I think whether cryptocurrencies are money is one of the most controversial topics out there. And what we think, one way to think about it may be to just start with the definition of money. Traditionally, money is defined as having, characteristics of being a medium of exchange, a unit of account, and a store of value. Now, when you think of a traditional currency like the US dollar or the Singapore dollar, it does all three reasonably well. If you go to the supermarket, the unit of account purpose is served. Everything's priced in local currency. When you go to the checkout counter, you're able to pay in that currency, so it ticks the medium of exchange box, and arguably it does store value. Inflation, definitely hurts that to some extent, but small allocation to gold, for example, could help, as a combination. So those are sort of three characteristics. You can see how a traditional currency serves those three purposes well. Now, when you compare a cryptocurrency like Bitcoin against those three characteristics, you can see where the challenges are. So on unit of account and medium of exchange, you can arguably find some goods and services providers who do price, their items in cryptocurrencies and are willing to accept it as payment. But to be honest, it's quite limited at the moment, largely to the enthusiast community. So it doesn't really serve those two functions very well at the moment. Now, surprisingly, as a store of value is where it has actually done relatively well, actually end-to-end, even holding up against inflation. But obviously that comes with a caveat that its value has been extraordinarily volatile, at least measured in traditional currency terms, and we haven't really seen it perform through a cycle. So I think on two measures, I think it's debatable, and I think a store of value where there may be something, but we need to see more history before concluding firmly.
Well, but if we look at the recent years of price action among cryptocurrencies, they do seems to be holding some value, and of course we've also seen adoption making some traction there with some institutions actually starting to include cryptocurrencies as a cash reserve. So would you agree that cryptocurrencies is something that can hold value longer term?
Well, I think it's encouraging, yes, that cryptocurrencies like Bitcoin have held value despite some dire forecasts that they may be completely worthless. But I think this is where their use or utility may be quite important. And there are two areas where we're beginning to see some utility come through. First, of course, is the gaming and the non-fungible token or the NFT industry. Just as one measure, today the number of games using cryptocurrencies as a medium of exchange and allowing you to go back and forth with US dollars has grown to over 1,000 games today. And similarly, one forecast we looked at argued that the NFT market cap is likely to exceed $80 billion by 2025. So there is some utility coming through from that one channel. The other, of course, is utility where it helps solve problems in existing industries. And a great example of this is remittances, where one cryptocurrency provider was able to help cut money remittance times from 5 days in the old world to 3 seconds when they use a blockchain based cryptocurrency. So while it doesn't directly link to what the end value might be, clearly some utility is beginning to come through.
Okay, so you also mentioned about cryptocurrencies being highly volatile. So what can we learn about, say, major cryptocurrencies' relationship with other financial assets? Are they totally correlated or less correlated? Any insights on that?
Well, one big caveat is that we don't have an awful lot of history to work with. And the history we have doesn't even span a full business cycle. So I think all the relationships we've seen highlighted, I take them with a pinch or maybe even a full tablespoon of salt. But with that disclaimer sort of out of the way, I think there are four relationships that really stood out to us. I think one is over the short term, at least, you can see there's a high positive correlation with risk on assets like small cap stocks. I think that's one that has come through the past few years, at least. There is a moderate positive correlation with gold. It's definitely lower than what we see with risk on assets, but it does feed into what we discussed earlier about cryptocurrencies being a store of value. Third is that there is an inverse relationship with the US dollar. Now, this one I found interesting because you can see there's a big parallel with, viewing cryptocurrencies as an asset or a commodity, and that sort of line of arguments where there is an inverse relationship with the dollar. So that one does come through. And finally, there is an argument that cryptocurrencies can serve as an inflation hedge. And I think when you look at the returns against inflation, yes, point to point, Bitcoin arguably has delivered total returns beyond inflation. But the big caveat is that came with a massive amount of volatility, and we don't have the history through business cycles and different inflationary periods. So something interesting coming through, and at least the recent data, but I think the jury's still out because we simply don't have enough history yet.
Okay, so given the many different users and relationship that you have just described, how does one put a value on cryptocurrencies? I mean, what framework would you use? Because if you look at some of the forecasts, they can either be really pessimistic to ascribe no value at all, or extremely optimistic to 5, 6 digit even as a store of value. So what are your thoughts on this?
So I think you're right. I think the forecasts or valuation methodologies do tend to lead you to extreme forecasts, either very optimistic or very pessimistic. And I think where that's coming from is there is no well-accepted methodology at the moment. There are arguments out there, but the reality is many of them are quite subjective, and at least the ones that are published do tend to be have quite a big positive bias. But just to summarize some of the common ones, I think one common argument is to compare, as we discussed earlier, cryptocurrencies as a digital currency. So then the argument is you could compare the market capitalization of cryptocurrency with the market capitalization of a payment provider like Visa or MasterCard. And if you use that measure, you could argue, currencies like Bitcoin or Ethereum are still undervalued. Now, a second argument is that if we get greater institutional adoption, so for example, a simple thumb rule of a 2% allocation by major sort of asset allocators, again, by this measure, currencies like Bitcoin would be highly undervalued, though obviously comes with a caveat that this would only be possible if volatility were to come down to more reasonable levels. And then there's a third argument, which is more about, okay, what's a currency's intrinsic value from a utility point of view? And that's where you get, the more extreme arguments where, Bitcoin arguably has a value of zero by this measure, while some like Ethereum, which have a little bit more value in use cases via their contract-based nature, could arguably at least have a positive value, though it's hard to put a specific number on that, and most probably be a lot lower than where today's price is. So a lot of very subjective ones, many assumptions going into it, but it's still a highly subjective process.
Okay, so if we were to look at cryptocurrencies, I think the next big thing seems to be on regulations, and many countries have taken very, very varied approach with regards to cryptocurrencies. You've got the likes of El Salvador adopting cryptocurrencies of Bitcoin as its national currency. At the same time, at the other extreme, you have China, banning outright all cryptocurrencies transaction. So how do you see regulations impacting cryptocurrencies generally?
Well, regulation actually might be possibly the single most important thing to follow from this point forward, because like you said, I think it could have quite a big impact both on adoption and what value ends up being ascribed to it. So At one extreme, as you described, there are a few countries which have outright bans on cryptocurrency. And when you think about what that means for value, that effectively means the cryptocurrencies would be worth zero in that sort of regulatory environment. But fortunately, many other countries are looking at something a little bit more measured. So if you take the US, for example, today they simply treat cryptocurrencies as an asset. From a tax perspective, so taxing capital gains. But when you think about some of the efforts or the direction of regulatory research around this, in the US, the efforts are to think about, how can you address, anti-money laundering sort of guidelines? How can you protect small investors? Questioning whether coin issuers should be, like a bank, like an insured depository institution, and whether wallet providers should be subject to more sort of regulatory oversight. So you can see some parallels coming through with the existing financial industry. And I think the good news is that, look, as we get more regulation, it should definitely help from an adoption perspective. But I'd caution that doesn't necessarily mean, prices go up. I think adoption, there's clearly a positive path to adoption, but it doesn't yet tell you anything about what end value that should end up, leave cryptocurrencies at, whether that's higher or a lot lower from where we are today.
So, putting this all together, what does the evolving landscape means for an investor interested to invest in cryptocurrencies?
Well, I think overall where it leaves us is that it's clearly an exciting area. It's very new and clearly still a lot of areas that need to be developed. But it's a lot of the detail, once you start digging into it, also means that excitement needs to be equally tempered with being very, very cautious because there are a number of moving parts that haven't been resolved. I think on the positive side, we're clearly seeing some signs of greater adoption. And, it's a good thing that cryptocurrencies have been able to hold value. But I think the key here is to really focus on regulation and see how that develops, because that may be one important input into how adoption and value develops from here. And and I think I'd rather focus on those rather than the headlines, which can be, have quite a bullish bias. And as we discussed in, some of the valuation arguments, when you look under the hood, those tend to be highly subjective. So it's something we treat with a lot of caution. I think the final point I'd make is, regulation, of course, is one thing, but equally is volatility. Think about the institutional adoption argument. Bitcoin, for example, has a volatility of almost 76% compared with just 11 to 12% for global equities. So, that's one factor where volatility does need to come down to more usual levels, I suppose, before we start seeing more widespread adoption, at least from an investment perspective. So exciting, but approach with a lot of caution and with both your eyes wide open.
Great. Thanks so much, Manpreet, for taking your time with me today. And thank you, listeners, for joining us. If you've enjoyed today's podcast, don't forget to like and subscribe to our podcast channel whenever and wherever you get a podcast from. Stay safe and speak to you soon.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.